welcome back to the RationalInvestor.com's Daily Brief. Happy Monday morning, TGIM. 27th of March, so coming up on the end of March here very quickly. Suppose this is the end of the first quarter of 2023. Interesting data, first 2 weeks. Fund managers generally had the market pegged fairly well. As we're coming into the end of the quarter, maybe we'll talk a little bit more about how those first 2 week studies played out. If anything, fantastic testament to the work Zach is doing. He actually had a really cool presentation on Friday about his work in the options markets with spread trades, and then specifically using some of the topics actually that he teaches in the level 3 program. And it's so cool how each individual instructor really becomes an absolute expert in their particular modules. But it's kind of weird too, though, because I got guys who are like GAN experts that don't do seasonality and harmonics because they're in different courses. It's a little bit odd how that works. But anyway, point of the matter here is coming out of the gate here first thing Monday morning, I think there's a bit of back and forth in the market. Probably a lot of position squaring heading into the quarter end. And I did notice, for instance, technology was dramatically outperforming heading into the end of the last week, but the entire quarter is just about to come to an end. So we're probably going to see technology back off a little bit, maybe see things like the financials and real estate and stuff catch a bit of a bid to sort of balance things out, because the sector rotation modeling images were very, very skewed towards tech right now. I suppose some point down the road we could point Seward in that direction, see if we could get him to producing those reports. That would be super cool for the dashboard. It is Monday. A lot of Monday for me is sort of just, getting sort of back into the groove of first thing in the week. And unfortunately, usually Mondays and Fridays, a little bit wonky trading wise, and setups don't really cleanly set up very well. I think I heard a guy recently say that Friday is technically garbage day when it comes to like news. If you want to sneak something through that's significant in the world, but you don't want anybody else to really pay attention, you really want it to sort of slide underneath the radar, make the announcement on a Friday, and then hopefully by the time Monday rolls around, people have completely forgotten. So to that end, had a bunch of housekeeping that had to do here this morning. If anything, the one bad part for trading is don't go and start up one of these sort of online education platforms and businesses and stuff, because it always distracts you from trading. And there is a certain part of me that's kind of like, I've had enough of this silly, I'm going to change the world for the better and all that kind of crazy talk, and just get back to trading. I kind of miss it. But anyway, been working away on sort of trying to be a demonstrator of best practices. We were, I had actually quite a few people inquire as to sort of a in-person training program, kind of boot camp. And this is sort of what I would be doing on a day-to-day basis. FYI, that boot camp, we were kicking around the idea of doing one this spring, maybe a bit short notice. But if you are interested in participating, I think the gang wanted to get together in the south of France or northern Spain, along the Atlantic coast there, maybe even head back to Portugal, although we never did hear back from the little old French lady. And so if you are interested in doing that, then, by all means, get in touch with me. Doing things like just setting up my sort of pre-market checklist. These are actually things that Chris and I worked through when we were doing the opening range trade. This is a number of different trading plans that I have running. This is opening range trade And also too, an ICT concept that was kicking around. I just wanted to paper trade it a little bit. But anyway, so that's what these are. Of course, my bot, L Tangonators. Everybody knows about that. The DI algorithm. Little Old Ladies Canasta Club trading plan. I have a stock swing trading plan, options trading plans for Zach spreads, and actually this was actually the worksheet that Chris and I put together for the opening range trades earlier. Anyway, so I've been working away on building this out. I think I would like to try and talk a little bit more off of this kind of spreadsheet kind of thing, where everything's all just on one sheet and you just go through checklists. Am I ready to go? Am I doing it? As you can see, I was doing a little bit of housekeeping this morning, and under Econs we can actually put none. There wasn't really anything dramatic. And I suppose the only news that I really saw that really jumped out at me here today, over the weekend, this goddamn guy over there in Russia is hell-bent on starting a third world war here. So he's planning on moving tactical nuclear weapons into Belarus. Why? I have no idea. You'd think, what's really interesting is before all this started up, the Belarus dictator guy, he was on the brink of being ousted. So it's fascinating how that pendulum has massively swung back the other direction. Also, too, a little surprised, to be honest with you, hearing a banker who's actually a pretty intelligent lady. My notifications, I like Caitlin, so I happen to get notifications when she's sending out tweets and stuff, although it's not here now. There it was. She was commenting about this guy. This guy's a journalist. And, especially when these journalists get to the point where it's like, Farad's take. I mean, who the hell are you? No offense. Something really weird happened in our society about 10, 20 years ago, where it used to be that journalists would interview the quote-unquote experts in our society, and their opinion was what mattered. And the journalist, of course, would basically write up or talk about the expert's opinion. Then all of a sudden, something really weird happened, I don't know, 20, 30 years ago, where the journalist now, what the hell, what does your opinion, no offense, sir, but what does your opinion about the US dollar as a reserve currency, what does your opinion mean anything? This is an editorial. And I was a little surprised that Caitlin is getting sucked into this nonsense. And I mean, it's interesting that they're humming and hawing about China and Russia and stuff creating a reserve currency. And I actually replied back to her. I was like, come on, Caitlin, you can't possibly be serious. In fact, I think that was my response was, oh, actually, it's not even there. But I'm a little surprised that a banker herself, I mean, just think about this. If you had $1 million in your pocket, would you go and give it to a Chinese bank with the full understanding that you could get your $1 million back at any point in time that you want your money? I mean, obviously with the whole U.S. crisis banking system, well, you can't do it in the U.S. anyway. But, I mean, if you actually get sucked into that trap, you deserve to have your money stolen from you from Vladdy. I mean, Vladdy's personally responsible for the murder of about 250,000 people here over the past year. Winnie the Pooh, of course, got blood all over his hands. With the Uyghurs and all the various different, fucking purges and shit that he's doing over there. So I'm actually a little surprised. This, to me, feels like FUD. Somebody's trying to stir the pot. This is actually a stupid conversation, because the Chinese yuan is actually still pegged to the US dollar. So this guy's economy would completely collapse if he actually broke the US dollar yuan peg, because then there would be no value to the Chinese currency whatsoever, and they wouldn't be able to do any business outside of the country. So I was a little surprised when I saw this morning. And actually, some other guys in the marketplace that are kind of old timers like me, when I put this kind of comment out, like, this is ridiculous. What the hell are you people doing? Why are you, and why are we listening to an editorialist who's a journalist by trade? This guy's not a trader. He doesn't manage billions of dollars. I mean, the only reason why we use the US system is because you can trust it. There is technically a rule of law, and you can take your case to the Supreme Court if you have to. And oh, by the way, it's kind of interesting. You saw he has in here the Japanese yen. What the fuck? Don't you realize that the Japanese yen is completely owned by the U.S. dollar? The princes of the yen. I think the famous book was after the Second World War, the Americans just basically went in and took over. So I mean, and the saddest part about all of this is it's all dominated by the Rothschilds. I mean, it was really the Rothschilds and the central banking cartel. They're all working in cahoots together. So anyway, that was one thing that I woke up to this morning, and I was a little surprised that Caitlin got sucked into this quagmire because she should know better than to get sucked into this nonsense. Anyway, that surprised me a little bit. So, our part of our broadcast is supposed to be, what's happening in the news. And so I saw that and I was kind of like, that's a bit suspect. Anyway. Lots of I think Vladdy's trying to ratchet the temperature up here across Europe. I mean, I think his whole gambit failed there in Eastern Europe. We'll see how that unwinds. Other than that, I didn't really see a hell of a lot for news driven that's really going to drive the market one direction or another. Interesting. AP is talking about how Black and Hispanic investors struggle with faith in crypto. What? You gotta be kidding me. Bitcoin does not care whether you are Black, Hispanic, brown, yellow, green, purple, lady, man, houseplant. So what the hell's going on here? Is somebody trying to, juice things a little bit? I get the feeling. And I don't know, maybe it's a kind of a slow news day. It seems a little bit suspect, some of these news articles that I've seen. And then, of course, as we talked about a moment ago, and actually we did this on the Sunday report, actually I want to just show you guys. It was kind of a fun thing that Chris and I were working on. And if anything, maybe what we should probably do is, as I had said on the show yesterday, I really do like the idea. Paul does his weekly newsletter for that weekly crypto show. We should really probably try and get, although I don't know where the hell I put it here. We should try and get like a little mini newsletter for our weekend show. So Chris and I were actually kicking around a couple different formats. This was Chris's suggestion. I was like, get Brian's face out of there. What are you, crazy? But anyway, something along these lines. That's what I was kind of thinking. But, give us some feedback whether you'd like to get like a report like this in the mail, which is just a nice clean summary of the sort of the weekly conversation on the weekends. What are the big sort of news drivers? What are the big econs? What's Brian's take on the Bitcoin price? What are the algos saying? What's the weekly commodity trend survey saying? What are some trades of note? Or maybe some links to our social media and blog posts and stuff like that. I don't know. I think so. If anything, in the comments of this video, let us know whether you would be interested in receiving a nice little summary email, just like a one-pager. We're kicking around that idea. I think it's a good idea, but maybe give us some feedback on that, please. Let's see. I didn't really take any day trades. If anything, like I said, Mondays, I'm a little bit leery about jumping into anything in particular. Probably actually not a bad idea. Chris, maybe you could write this down. Monday morning, we should probably just do a review of what the hell this US dollar index actually looks like. Look at that. So DMAC says, yep, already somebody's saying it would be a good idea to get that in the email. And I think that would be a really good way for us to also build up our sort of email contact list as well. You go on CNN. I mean, when was the last time you ever got good investment advice from CNN? I mean, come on. It's crazy. I mean, very simply put, higher highs and higher lows defines a bull market. You tell me. I mean, just don't bullshit yourself here, right? Don't. And this is the worst part about investing is that a lot of people they get sort of sucked into the emotional response. I mean, yeah, we all hate the banksters. Don't get me wrong. I don't like the banksters any more than any of you. Just hey, let's call a spade a spade. But at the same time, too, don't be calling for the end of the U.S. dollar and the U.S. dollar index and the U.S. dollar hegemony system as long as I'm seeing higher highs and higher lows. This is a bull market. And ironically enough, it's actually been a bull market since the U.S. financial crisis. And it was fascinating, through that whole sort of Jupiter-Saturn cross and, my demographic change and all that, the fear-greed cycles. This thing just keeps making higher highs and higher lows. That's a bull market, folks. That's not a bear market. So, listening to people squawking about, well, the BRICS nations are going to form their own reserve. Who the hell's going to trust China? I mean, are you really going to give $1 million to Iran to manage for you? Oh, and it's gone. Hey, what happened? And I mean, Caitlin Long kind of money, like a managing $1 billion kind of idea. I think the people at SVB, they just made really bad risk management decisions. And really, they got complacent. In fact, I see this happen in crypto a lot. We go through these cycles, cycle in, cycle out. Kids are always trapped long Bitcoin from the top of the market, and they can say, well, I'm safe at Bitcoin. Then Bitcoin goes and loses 70, 80% of its value, and they're like, oh, now I'm poor. But really, it's just an asset that's going up and down, and unless you have to mark the asset to market or something on a daily basis, nothing's really changed. So SVB just ran into really bad risk management on their part, in my humble opinion. Were they set up to fail by the cartel of banksters they really want to put all these regional banks and sort of non-banks out of the banking business? Yeah, I definitely think that's the case. And that's a sad reality, is that you can't trust anybody in this world. Oh, what a surprise. Everybody's out to try and eat your lunch. Oh, what a surprise. If somebody can get something free from you and not have to do anything, they will. Oh, what a surprise. It's a nasty, nasty species, this human species. I'll tell you that much by crackers. Anyway. Higher highs and higher lows, and then we just went through this absolute insane face rip on the US dollar. I might just argue that what's happening right now, ironically enough, is actually just technically healthy. Market can't keep going straight up like this forever. And if anything, that's the whole point of these reload zones, is that my hunch is probably pull back into things like trendline support, maybe even tag the POC, who knows. Hell, we might even have to come down and swim against these lows. But, on the longer term basis, we're still making higher highs and higher lows. So I don't think the US dollar is concerned about going out of business here. Could we see some volatility? Absolutely. It wouldn't surprise me at all. And in fact, you might even argue, had you been deft, and of course I think Julian was doing very well at this. I mean, we all see the M's up here. I mean, hopefully you've watched enough of my videos. Now you understand this Feigenbaum chaos theory. So just the fact that you see these two M's up here, what a surprise. Look what price is doing. It's oscillating right around these two Feigenbaums. And notice, where's the next Feigenbaum? Oh, it just happens to be right around Brian's favorite fib. And then, of course, any of the people that are a fan of volume profile, you know that the profile wants to look like a parabola. And this is what we call a MUOC, right? This probably that level right there needs to be traded to. And really all of this should probably be filled in. So is this the US dollar's crashing and we're all going to hell in a handbasket? Or is this, well, it just looks like it's business as usual? And ironically enough, especially when it comes to trading, hey, look at this. Well, didn't somebody say that the 91.4% of the time gaps like to be filled in? I mean, that's basically, you can even see, you could actually start creating a trading plan saying, well, I got a Feigenbaum constant. I've got, that's the bifurcation level. I got Brian's favorite fib. I've got the profile needs to be filled in. I got a big fat juicy gap that needs to be filled in. And hell, you could even make the argument that maybe we have to come back down here and do a Benkov check, right? Right against the POC here. It would just be normal. There's really nothing out of the ordinary. And no, the US dollar is not going off the board. It's just very business as usual. You know, if anything, what concerns me is somebody has an agenda. They know that the US dollar is going down here. So do they want, and you know, remember, the public always sells at the bottom and they always buy at the top. So when we start cranking down into here, which is just doing nothing more than a very normal technical move, is that Farik guy going to be like going all crazy and see, I was right. The US dollar's crashing. You better sell everything. Sell it all to Peter Lynch, right? And you might as well get sucked into the euphoric panic. And on the irony of it all is I'll be on the buy side. I'll be buying at that level. So anyway, rant. There you go. Merry Christmas. What's our sort of take on, okay, well, let's just bring this back to today. What's the tone of the market for today? Index is off what is that? That's like 1/8%. I don't think that's a huge move either one way or the other. You know, what I like to do on a daily basis, kind of like, you know, my morning checklist, just come in, just kind of get a barometer reading for what I see happening in the market. We have seen that things like there was one econ that was of note here that today, and that was German business confidence, if you will. Over here, German business climate highest in 1 year. So the Germans, they're feeling a little bit better, especially after that sort of punch in the nose there from Vladdy last year. So I get the impression that Europe's feeling a little bit better, which is probably going to encourage the Europeans to try and raise their short-term interest rates because their economies can handle it to try and deal with the inflationary pressures. I think we showed you last week, like the UK inflation numbers are just absolutely horrific right now. So they really should be raising their interest rates over there in Europe, which should probably enable the euro to rally a little bit here. And 30 some odd percent of the US dollar index is nothing more than the euro. As well too, looks like we have a bit of a bid coming in on the energy market. Energy was in a bit of a free fall here recently, so it shouldn't surprise us, I suppose, to see the Canadian dollar moving up. And metals markets look relatively sanguine, so not a big surprise. Yen's kind of sanguine. Aussie dollar's kind of sanguine. Interesting, Swiss franc still fairly firm, probably moving with that euro movement, which means you probably should see the Swiss thinking about raising interest rates. And the Swiss franc is actually a really good proxy for gold. Usually they move similarly, so if the Swiss franc has been moving up appreciably of late, then it probably means that gold's going to do half decent. So you can see Swiss franc's caught a bit of a bid here recently. If anything, it almost looks like we're coming into some sort of, well, maybe this cycle's off a bit now. But maybe we need to start maybe heading back down, testing these lows in the not too distant future. But you can see Swiss franc's making higher highs. Got a nice foggy boggy up here. Probably want to redraw that up to this level here and to there. So that puts actually a target way up top there. So that'd be interesting to see if that gets hit. And of course, our conversations of late have all been about how the fiat currencies, they just keep diluting themselves. I don't necessarily think that the Americans are any worse than any of the others. At least the Americans tried to do some quantitative tightening, and I think to a certain degree they are actually still doing it. Obviously, this recent spat with the regional banks has derailed that a bit, but they're claiming that the sort of bailout fund that they've created is not going to directly translate into more money printing. We'll see what happens. Canadians, of course, just going absolutely crazy with their money printers. Same thing with the Europeans and with, Australians and stuff. So there's no real change there. Stocks, as I had said earlier, the NASDAQ kind of was outperforming there last week. I suppose we can take a moment and talk about that. What time is it here? Well, we got 5 minutes left. I haven't really done any trades, day trades or anything of note here today, so we don't need to necessarily get into that today. But just to follow up on what Zach was saying on Friday, again, if you're watching this channel for the first time, I have to say Zach did a fantastic report there last week on options and option spreads. And he also incorporated things like sector rotation and seasonality into his analysis to come up with ideas. It's just top-notch work. So maybe check that out. But so there was the sort of the first quarter of 2023, and you can see heavily skewed to tech here. Maybe a little too much. Keep in mind that the first 2 weeks study, or first, even if we just do the first week, you can see that sort of the picture through the month of January. This is roughly right. We had outperformance here. We had outperformance of the energies, but this was maybe a little bit of seasonality factor. But it wasn't just an absolute runaway steamroll of tech and then just an absolute destruction over here. It's kind of a little bit of a balance, and you can see here technology hasn't nearly done what this is saying here. So, in what you're seeing in the market today. Is it maybe, and things like the tech market kind of emming out here? Is that maybe just because this went a little bit too far, a little too fast? I think so. And it's interesting when you go to sort of the news headlines, they're saying things like, well, the U.S. Dow and S&P extend gains, but why is this NASDAQ lagging? And I think this is just really portfolio position squaring heading into the end of the quarter. As you can see, Japan had a relatively good day. I usually like to assume what Japan does. It's going to basically sort of trickle through to Europe and North America in case there's, unless there's some sort of bombshell elsewhere. So Japan had a relatively good day. So not really a big surprise. Like we said, German Econs came out relatively positive. So they're having a relatively good day. The only sort of outlier you see, looks like Shanghai here was down just slightly. I wouldn't consider that kind of movement too big of a driver. I think on balance, though, the market's relatively positive. I don't know whether I really want to read too much into the NASDAQ. I just think that the tech stocks just got a little too ahead of themselves, and you're probably seeing some portfolio balancing heading into the end of the quarter there. All right, so that's sort of your summary for today. I suppose we ought to just check in on the old corn, give you guys an idea what we're seeing there. Did a fairly lengthy overview of the corn yesterday. So nobody should be surprised that we were coiling. In fact, this was the image that we had yesterday. This is called a diamond pattern, and it was building to some sort of apex. Fascinating that right into the apex. Look at this. This is a really good lesson, message of the market, right? W against the bottom of the diamond, and then M against the top. And then M within M within M. Now we have like a triple top working here. So I get the distinct impression that there's a pretty damn big brick wall that's just been formed here on Bitcoin. And not really a big surprise, all this kind of craziness while the adults are at work. And then we go into the weekend and everything just stops. As soon as the adults come back to work, then the shit show can begin again. And I haven't really seen any sort of newest sort of regulatory comment out of the space today. But we all know that the rhetoric has been pretty negative recently. So, are we going to resolve the diamond pattern here today? Remember, the rule is we have to see a close on the other side of the diamond. So, just like this is an outlier, and we can't really believe that. I hate to say it, this tail here is an outlier, and probably, even just looking at this double top, kind of like what this trade was. This was set up within the diamond. I think you could probably make the argument that, this is just like, this is TRI, textbook 101. M's are bearish, W's are bullish. Oh, and look at that. Do you think that's an accident? I mean, that's incredible. Do you think, look how that is like literally exactly 2-to-1 risk reward shorting this M, and look where the market stopped. My hunch is, this was a very manufactured trade, and into this low, of course, there's people that have stop loss orders, and there's probably people that have sell on stop orders here, because I don't know, you have to wait for the close below this diamond to actually assume that it's been resolved. This actually became like a liquidity pool. You hear Julian talk about liquidity pools, liquidity pools. Well, they work both directions. So I might argue that that was not only a profit objective for anybody who shorted that, so they were ringing the register there, but there's probably a bunch of stop loss orders against this low. And if I'm not mistaken, I think off of the daily chart, basically I was just suggesting, it might have been the 4-hour, that, had you, been long this, then you probably want to have your stop just below this diamond, and maybe that's exactly what that was. And then we went after the stops. Notice how yesterday we were kind of thinking trend continuation off of this 4-hour chart, and we were asking, do we have 3 higher lows? And look how we came up to the bot level and then just went and M'd out. We just could not get any traction, and we busted through all these lows. So that means that this bot setup is now back in the box. And you have to start the count all over again if you're a bull. I don't know whether I even want to be a bull in the face of this. I think with this level taken out, that in itself, like I said, had you been in this bot and you were working stops, that I think would have stopped you out there. You have a big M off this 4-hour chart working now. So if anything, it's the market's job to actually prove to us that you're still a bull. The bear analogy is starting to build here appreciably. And the simple rule in my eyes would be, it's incumbent on the market to show me W's here. Versus just assuming that it's going to go up. If anything, I have to assume, they always say assuming, makes an ass out of you and me. But while we have these M's all in place here, I think the bull should maybe just take a bit of a pause here. So with that said, like I said, the bot itself needs 3 higher lows to justify being long. We had 1 low, 2 lows. We were trying to get up through the bot level, and that crapped out. I think you're right back at now. We have 1 low, so we have to wait for a 2nd low, a 3rd low, and W's within W's, and then we can start getting bullish again. But that's going to take a hell of a lot of work, folks. My hunch here, if we go back to the daily chart, is, and this is so cliche, but it is what it is. My hunch is that the megaphone did its thing. So 1, 2, 3, this is a trade location. We had a big FUMC as your fundamental catalyst. Market loves to rally into FUMCs and then dump on the other side, and the dump is in progress now. So, just try and go slow. Don't get too emotional through this. And as I've said repeatedly, if anything, this asset has come an awful long way. Could we not take maybe a month or 2 and just clean all this up? Keep in mind, Brian's birthday is May 11th. Usually the market isn't very happy through Brian's birthday. So, sell in May and walk away, all that kind of talk. Where is May? There it is right over here. So, I mean, you see how long this correction took. If we go, maybe it's going to look something like that. So, if we just drag that over, well, there you go. May. That would be almost perfect. And it would just be absolutely cliche that the market dumps into my birthday and everybody hates me. It would be absolutely textbook. Anyway, so, I was leery about wanting to come in on the buy side up here anyway, folks. I mean, let's just call a spade a spade. Is this actually a trade setup for me just yet? It looks sloppier than stink, to be honest with you. Wicks and tails like to be eaten. This is stamp. Stamp's a little screwy because it's got this huge wick where the other places don't. Now we've got a big tail. Could we spend this week also chopping around through here? Sure. It wouldn't surprise me. And the rule is that really we don't have any clear definition that this megaphone has actually broken and we are heading down in earnest until we actually start seeing closes below this level. And then what probably happens, but this is just pure conjecture, but what probably is going to happen is this short, if there is going to be one, will just simply be a Wyckoff check or a Benkoff check, whatever you want to use. So we break the lows, then we rally back up, and the failure in here will set up that short if it comes down the pike. So there's your Bitcoin summary for you first thing in the morning. Did see some FUD around CZ and Binance getting into some more trouble with U.S. regulators. Maybe that's what's going to happen. I don't know. Let me know whether you guys are having problems withdrawing money from Binance and coins and stuff. I don't know whether I'm doing something wrong, but I'm just curious as to whether if you really did want to get the hell out of Binance in a hurry, could you actually do it or not right now? I don't know. But anyway, maybe in the comments you can maybe just post a note or two as to what your experience of wanting to move assets in and out of Binance is. Is it getting a little tacky? Is it getting a little sticky right now? Let us know. All right. I think that's probably your summary here for Monday morning. Cal asked, Brian, do you think we could see a push upwards after the May dump and maybe a hit for a new local high into September, October, where we see a drop and ultimately bottom 6 months before the halvening? Whoa, there's a question. Why don't you pop in over on the Afterparty show, and we'll talk a little bit about what we see going forward from that perspective. That's a lot of questions all wrapped into one there, Kali. All right, okay, everybody. I think I'll leave it at that for today. Kind of a slow news day. Didn't really want to get too wrapped into any hunting day trader setups being Monday morning, just sort of getting back into the loop of regular trading week. As we said, slow Econs day, and then a little bit concerned that right now it's a world of FUD and a world of emotional decision making. So try really hard to not make emotional decisions in the marketplace. Build your plan, vet your setups, 3 unrelated reasons. And frankly speaking, looking for 3 unrelated reasons, I don't have any reasons to be a buyer here now. So it's not really like Bitcoin's going to zero. It's just that Bitcoin's actually a bit expensive right now. And, how does the 1% get Bitcoin price to come back down into prices that are maybe reasonable to actually consider investing? Well, they're going to inject a lot of fear into all of you guys. And I think to a certain degree, that's what's happening in the marketplace right now. So, okay, As Chris would like me to remind you, we really would like to try and get these YouTube subscriptions up here. Seems a lot of people, when I go out into the public, they actually gauge how good of an analyst I am based on how many people are subscribing to these videos. I don't necessarily think that a non-trading related algorithm that has absolutely nothing to do with trading has anything to do with how good or bad of an investor you are. It has everything to do with, do you play the social media game well, and do you, would you be like elected class valedictorian? Well, not really valedictorian, but like class president kind of stuff. And I never did well in those kind of things. So I am who I am. I sure hope you guys get value out of my rants. We're very consistent, which I think is super critical. We're always going to give you the straight goods here. No bullshit. We don't have any sort of outside third party conflict of interest to worry about. We're just here all just trading our own books. So if you would like to spread the good word about our honest opinion, we'd appreciate it. Maybe you guys, there's 30, 40 of you watching this video right now. Maybe you could hit the like button. If you enjoyed my rant here today, consider subscribing, consider joining the site for all the various different products and services that we offer on the site. And if you'd like help building and running your small business of trading, well, we've got a whole program in store for you. So I won't go into that, Shill. I think probably leave it at that. I've been going for about 40 minutes here, so why don't we leave it at that? Have yourselves a fantastic rest of your day. PMA for the win. We'll see you all again back for tomorrow. All the best. The only thing left for Brian to say at this point is bye for now.